Okay, we got advanced GDP numbers, unemployment claims. Both of these things have the potential to move the markets pretty big here today. Let's keep an eye on that. Indices just moved lower. Gold just moved lower. Gold's all over the place. Hold on. I'm going to switch over to the all markets view so we can take a look at this, see what GDP figures are looking like. Dollar's up. Maybe that suggests a little bit of strength in GDP. Wow. Hold up. Wait just a second. Okay. 2.8% GDP compared to forecast. Whoa. Okay, that makes things a little interesting. So now you're talking about advanced GDP coming out way better than expectations or higher than expectations. Is it better? Is it good or bad? That's what everyone wants to know, right? A little tricky because you want to see rate cuts, but you also want to see decent growth. This is a good stance for growth, but not a great one for rate cuts. Remember that if the economy is growing or expanding rapidly, that leads to prices going up because people are out there spending more money. So we actually see the NASDAQ and S&P bouncing just a little bit. Dollar index, pushing up here. Gold, not going to love that off of the first reaction. Anytime you get a stronger than expected GDP statistic, I would my first reaction to that would be gold is probably not going to love that. But gold is already down 1% on the day, so it's going to take something pretty strong to push it lower. We also have got advanced GDP price index came out lower than expected, so some confliction there. Durable goods came out much lower than expected month over month. Core durable goods came out a little higher. I'd say this is a mixed report. You have a good mix in here. You also had the previous GDP revised a little bit lower, down from 1.6 to 1.4. So mixed, I would say. The volatility index continues to push higher and higher. Guys, it was up like 25% yesterday. The VIX screamed higher yesterday. And what does that tell you? That tells you this market is injecting fear into itself right now, right? It is getting a booster of fear because of everything that's going on. You get the market selling off. You've got concerns about the election, who's going to win, who's not going to win. You've got people who are concerned about if the Fed is going to cut rates or not. You've got really the big one that I see is, are we really starting to see the consumer start to crack? Here is the consumer discretionary ETF. I talked about this yesterday with Chris Pulver when he was on the show with me. Chris and I discussed the consumer side of things, and it's so important to the economy. If the consumer is feeling they're beaten down and they got bruises and bumps all over them, right? The consumer, and what does that is like high inflation or people not having jobs. If the consumer's feeling in pain, they're not going to go out and spend money, and people not spending money out there is not good for the economy, right? So the consumer, how are we detecting weakness in the consumer? Well, there's a lot of ways. Some of the big data points that we talk about so frequently would be things like retail sales, which has been coming in really weak recently. So take a look. We'll go through the last couple of retail sales figures compared to forecast. Remember, the red dot is our forecast. 3 times, well, actually 2 out of 3 times we've had worse than expected retail sales, right? But you can see that the retail sales month over month growth has been at like 0% for the last 3 readings, right? 0.10. What does that tell you? That tells you that retail spending is slowing down, right? Over here, look at this. This was different. In 2023, you still had the consumer out there spending and doing A-okay, even though you had inflation going up. But as inflation stays high for a suspended period of time, it starts to hurt, right? Anyone else feel a little bit of pain when they go to the grocery store? Not alone. Because, inflation eats away at real purchasing power of your currency. And this is not something unique to the US. This is global, right? We all saw a higher period of inflation across most of the, major economies of the world. And unfortunately for smaller economies of the world, most of them got it worse, right? Inflation was is not certainly not just a first world problem. If anything, it is a more impoverished nations, way more painful to them. That's the harsh reality of inflation is it's very painful for places where their currency is not strong to begin with, and then it gets massively devalued during tough times. Anyways, my point with that is there a global slowdown in the works? And that's the concern today. That's the concern this past week. People are saying, look, the AI hype is great, but the consumer is starting to really hurt.
Our summer software sale is happening right now, which means you can get the Edge Finder for 50% off. COT data, top setups, pages of fundamental and technical data, and so much more. Our software is constantly scanning for new data and information and is updated regularly. The Edge Finder is a one-time purchase, which means you can get it half off right now and never have to pay for any updates made to the Edge Finder software. This limited time offer won't be around for very long, so don't wait and get this incredible trading software for half off before it's too late. Check out the link being dropped in the chat now to talk to one of our team members about our huge 50% off summer software sale.
The one beautiful thing about being a trader plus seeing volatility expand is that trends typically follow through a little bit more when you get the volatility index higher. It's also why, they say the market is not trending most of the time. It's, a lot of times when you get a very low VIX, a lot of things are not like following through as much. But then when you get huge spikes in the VIX, like 2020, things were just following through massively. Like they just kept going and going and going, which especially for, I know Miko and I share a style of trying to trail stops. That can be, the sweet spot is when things just go absolutely crazy in one direction. I didn't catch any of the yen pair sell-offs, but my goodness, I mean, if you were a trend follower,
yeah, it was a big one.
Yeah, I mean, those are some great moves. So very cool. I guess Miko, on the thought of the yen, I know we usually start with the dollar, but the yen is such a story right now. Are you watching any yen pairs?
Yeah, I've been looking at the yen pairs since 2 weeks ago, and when it broke structure, that's when I changed my bias on a few. I mean, they're all pretty much the same. But after this move here, I'm looking at some pullbacks now, but they have kind of hit some areas where I do think we'll probably see some upside at some point, especially like dollar yen's coming into a pretty big level over here. So I think we're probably coming up to some areas where we've had a big move. The market's probably a little bit stretched. Maybe you're going to have a bit of a pullback now. So I do think maybe for 2 or 3 days, if we see some upside, I'll start looking for some shorts again on some pullbacks. But yeah, I do think there is still more downside in the tank for them, because it's a really, really impulsive move. It's not like we've slowly fallen over. It's like a really hard move down. So typically when we do see those type of moves, if we do get some nice pullbacks, we do probably see a follow through of that. So to be honest, I feel like dollar yen and euro yen are probably my favorite, but in general, you're looking at the yen pairs to pull back and seeing whichever one sets up the best. But we are coming to some areas where I do think we probably could see some buy stepping. I'm not really interested to take it up, but if we have a good pullback, I will be looking at some sells.
Okay. Yeah, no, definitely interesting. The yen is, I feel like in the currency world, it's much more exciting right now than even the dollar index. I know everybody trades the dollar, and I definitely want to get you guys' thoughts on the DXY for a second too. But the yen, man, I mean, it is arguably so interesting because of the dollar still. We've had, some growth concerns out of the U.S. without getting into fundamentals too much. It looks like we're seeing some global slowdown in the economy. I'm not saying like, oh, we're entering a terrible global recession or anything, but that evidence of slowdown both in Europe, in the UK, and in the US is making the yen look a little bit more attractive, because now you've got this Japanese economy that is a little bit more steady eddy and predictable compared to other economies that are looking a little rough. So the yen right now, if you're a believer that the global economy might pick back up or do just fine, maybe you're looking to sell the yen on this move. And if you're more on the, I think global slowdown is going to continue, then you might be more on the buy the yen side. So very interesting stuff. I guess, Marco, on the dollar index, DXY, do you have any opinions on this one?
Yeah, sure. Let me take a look. So for the DXY, on the 1 hour, it's looking pretty flat, to be honest. 4 hour had some movement, so this is a pattern that tells me the market wants to go up. It is a V reversal in a range, or a cup and handle, or even a inverse head and shoulders, but basically it's a bullish pattern. The daily is kind of flat overall, but seeing a lot of selling pressure right here. Right now, a bit of a pullback. So yeah, I'm not sure if I could make my mind of the direction of this price action. It's very choppy. It's really much different than I see on Forex pairs. If I had to pick a direction, I think to the upside because of this V reversal and the range pattern. So that is my bias, a bit of an upside. And do you think so this weekend Biden dropped out of the presidential race, correct?
Yep.
Do you think it had a big impact on the markets? Because I can really see a big drop happen right after it. I'm not sure if that is connected.
Yeah, it's a hot topic for a number of reasons, because my comment section has been so interesting. You guys know I lean on the fundamental side, so I have to talk about the election a lot, which is not my favorite topic to talk about on the internet, because I'm not a political, expert or anything like that, and people just they assume that what my bias is, but I've tried to stay unbiased with the topic. But the topic is so sensitive. So I'll give you the run through that I've kind of given overall. I think the market, generally speaking, the ultimate, market mover is Jerome Powell and the Federal Reserve, his team. They are really the ones that have the big sway. Now, fiscal spending and fiscal policies can certainly move the markets as well. But right now, I think what's moving the market is just the uncertainty of who the president is going to be. Actually, when the odds swapped heavily in favor of Trump briefly, the market rallied. And also, if you remember, for people who were in the markets at the time that President Trump got elected, the market absolutely ripped on him first taking presidency, because naturally that side of the aisle typically leans more on the tax breaks for businesses side, which can cause stocks to pump. In whether that's good for the economy or not, that is up for debate. But the point is that generally is taken as positive. But I think that the bigger picture here is the certainty or uncertainty about who the president is going to be. So when the president looks very clear, like we have a very clear winner, the market says, okay, cool. Doesn't matter if it's Trump or someone else. It's just the market wants to know. When the market doesn't know something, it hates it. The market freaks out when it doesn't know what's going to happen, like when COVID happened, or when the Federal Reserve started raising rates all throughout 2022, and nobody knew when rate cuts were going to stop. That's why the dollar index was so hot to the upside, because people hate not knowing. And so whether it's one side or not with the president, people want to either know there's going to be a decisive winner, very strong chance of a winner, but not knowing in a more competitive race, which has trended more recently in the last few days. Harris, taking some odds back in the betting odds out there. I'm sure if anyone in the audience, you can look up predictit.org and you can look at the odds for the election. They've swung back to a closer. I think it's the last time I looked, it was like a 55-45 chance for Trump or Harris, slightly in favor of Trump. And so that uncertainty makes the market nervous. I think that does contribute to why we see stocks selling off. People just not sure what's going to happen is more important than who the president actually is. That's my at least stance on it. Not to go off the deep end on that, but that's
so it's good for us basically.
For volatility, it definitely increases volatility. Yes.
Yeah. Okay. Cool. Thank you.
Yeah. No problem. So we talked about the dollar. We talked about the yen. Speaking of stocks, which have been so interesting, Miko, I know you don't trade the indices, but we do talk about them. We take a look at them. What are your thoughts on this pullback? I guess from a trend analysis perspective, from you guys' take, I'm very curious to hear what you think on this. Obviously, we've seen a sell-off in the last few days, but is this uptrend still intact, or is this starting to show signs of rolling over? I'm curious your thoughts, and a lot of people in the audience are, I'm sure, as well.
So yeah, I think the uptrend is very much still alive, at least for the S&P. I'm looking on the higher time frames for this one. and it still looks very, very bullish to me. Yes, we're having a bit of a dip now, but nothing has changed in terms of the characteristics to tell me that, okay, we're about to reverse. I would still expect a bit more downside. I wouldn't be surprised if we were to come back to 52.74 before maybe we have another go at seeing a higher low, but I would still expect us to eventually come back to that high. I think in terms of maybe for the next few days, I would be open to some sells. I mean, I don't trade the indices, but if I was, I would be open to some sells to take some shorts, maybe on a retest of this low, but it would be shorter term, getting ready for some buys later on. I'm not convinced that we're about to push bullish just yet, but I think if we come back to some of these areas, 52.74 or even the high here, I think that's some smart places for some long. So yeah, I do think we'll put in that higher low soonish, but I do think we've probably got a bit more downside left.
Okay, yeah, fair enough. One more for you while you're on the subject. Try US 30, because this, from a technical perspective, I feel like you might like this one on the daily. This is one I've been watching too. I feel like it's hitting that support level. I'm curious if this one looks better or worse or about the same to you as S&P.
In terms of buys, it looks a lot better where we're trading, because you can instantly see where we're rejecting and we're back there again. So if I was looking to buy, I would 100% be looking at US 30 rather than S&P. I know there's probably some minor support here, but not enough to convince me. Whereas US 30, we've had a really nice break to the upside and now prices kind of come back down. So it's in an area where it does make sense for a high low to form. Whether it does or not, of course, we'll find out. But in terms of the location, I like it. And I like the 4 hour as well, because it's giving a lot of wicks there. So it does look like we're starting to struggle there as well. Yeah, low time frames a bit sideways, but I like the wicks there on the 4 hour. So at least we're seeing the market actually show respect to that level. So yeah, I mean, in terms of the direction, again, it's still very bullish. I use the daily and the weekly to come up with bias, and to me that still looks very strong. So I would expect to bounce. Whether we get back to the high or not, that's a different question, but it's a smart play for a buy, I would say.
Yeah, thanks for answering that. Again, I think I like the technicals a lot on the Dow right now, so I'm watching it myself. Marco, same question to you. Indices, any of them, you could pull up the NASDAQ, the S&P, the Dow, whatever you want to look at. Just curious your thoughts on this from a trend structure perspective. I'm curious what you think.
Yeah, sure. So looking at the S&P on the daily, the momentum is definitely down for me personally. So if this was a Forex pair, this would be a perfect reversal, because it has a really nice kind of ascending channel. Price is slowing down on the top, and then a really big signature of bearish pressure. So I would say this leg has a high probability to actually continue down and possibly be a bigger correction. Now, it doesn't have to be a huge downtrend. It can be, as I said, just a correction, but I would expect a bit more downside here. So maybe something like this to happen, and then for the price to possibly continue up. So my bias is for this to go down just by gauging at this leg and in this leg of momentum. Now the US 30, if I take a look, again, gauging the momentum, it has big bearish candles on the daily chart right here. Sellers are definitely in control of this market, so I would not be surprised if a pattern forms that I call the V reversal and maybe a range, and that is a bearish pattern. So I would expect downside if that fully forms. So if we can get another leg down like this, then it's game on for a downtrend, basically.
Volatility index, I was talking about this with our last guests, has shot up higher. VIX is at 18 today, which is very different than the low VIX that we've seen for most of this year, down in the 12s and 13s. And yeah, I mean, this is just a change in the kind of behavior of the markets recently. We see indices selling off, gold is selling off too. What are your kind of I'll let you go wherever you want to go with this, but where are you watching most in this market right now?
Well, I think these markets have actually shown who can adapt and who can adapt well quite easily. So for example, Nick, I'm not sure if you remember, but I was trying to short the yen for quite a while. Had to liquidate some of those positions. I'm still in some. However, that was my fault. I wasn't looking to adapt the intervention that happened. I thought it was just sort of going to be a quick intervention, maybe a little slight drop, consolidation, and a rise back up. I didn't really foresee the continuation of the downside, and that's because I wasn't really looking too much at the external factors. I was more just set in the bias I had because I've had that bias for so long. And that's a good example of, no matter how skilled you are, you can still end up making mistakes. But yeah, even like gold, the indices, the yen, we've seen quite a lot of markets change the way they're moving, and they've done it very quickly, and it's been very unforgiving. So I think this is, for newer traders that are in the markets that have been trading for sort of the past 2 months, this will be a bit of a shock. And I think it will prepare them for how trading can be. It can be very violent, and sometimes it can happen with very little warning.
Yeah, no, that's so true, James. And I always talk about this with the reference of the VIX. Most traders, they trade strategies that, this is every trader really. Strategies usually work well in scenario 1, which is in yellow, or scenario 2, which is in blue. Most strategies do not work well in both scenarios. When you have really high spikes in volatility, that usually entails markets selling off. It usually entails charts moving way further than you think they will in a singular direction. And then when you get these low VIX, some environments, you get more, choppiness. You get more kind of slow chugging uptrends in the S&P 500, etc. But it just, to your point about it changing so quickly, I mean, there it goes in just a few days. You've got a very a regime shift, if you will, on the way markets are behaving. And who's to blame you on the yen? I mean, that I totally, see what you're saying there. It's been one of the easier trades to just be short the yen on pullbacks. I too have been involved in that many times. And is this the big shift? We'll see. I mean, the question is now on the fundamentals front, whether or not global economies are truly slowing down. And if that is the case, the yen might have more upside, and which could lead to, dollar yen, euro yen to continue lower. But we'll see. I mean, we talk about frequently, I know you and I have spoken about the Japanese economy not being particularly impressive, but there is another component to that. If this is, let's just, I just want to show you a visual for audience members. Let's say that the red line is Japanese economic growth. And let's just say it's not very promising. We've talked about that many times. And let's say that, in a good time, this is other average economies. They're doing better. So people sell the yen and they buy the dollar, they buy the Australian dollar, they buy the Canadian dollar, but they sell the yen. But if this changes and we see other economies struggling, the yen doesn't change too much, suddenly it's the other way around. People go to the yen because it's like, oh, this is stable and reliable, whereas the other ones are falling apart. So maybe that's happening. I don't know. But I'm curious, James, on the yen side, what charts are you most interested in right now? And do you have any ideas or setups that you're watching?
Well, I'm currently in, so I had to liquidate, took my biggest loss of the year actually on the Australian yen yesterday. So when I came on stream yesterday, the energy might have been a bit off because it was it was a bit sore, I'll be honest. It was one of those trades.
Oh, I was limping yesterday, so you're good. Don't worry about it. NASDAQ and gold did not treat me very nicely.
Yeah, no, it's been interesting times. So yeah, I'm in the Australian yen still. So I had to liquidate an initial position, which was up here. I'm still in my secondary position down here. That one is low risk, so I'm happy to just let that one run. Again, dollar yen, still in this one, got both of my initial positions running. We are seeing a nice rejection off of the dollar yen on this sort of daily level of resistance. And this was still is actually my trigger. If this level's broken, I'll have to just accept the losses on all of my yen trades and I'll just cut them and maybe enter after Wednesday next week. We've got some yen news then that will be very important. So that's about it. I'm also in a GJ trade, but that's much smaller on a very small account, so it's not too relevant. But yeah, essentially I'm still long. However, if I know now if I knew then what I know now, I probably wouldn't be in these positions because I've kind of got myself into a difficult spot. But I need to reiterate that this is risk I was willing to take. You know, the loss I mentioned, percentage-wise, isn't a big deal. The drawdown I'm currently in on the yen pairs isn't a big deal. It's all relative to account size. It's just more the fact that I was this wrong when normally, you know, it's not this bad. I'm not normally this wrong for this long, if that makes sense.
Yeah, well, and here's the thing. I think just going back to, I know I keep reiterating it over and over, but this concept of a market shift, most of the time, I will completely say that when we do get the big market shift, usually I'm on the wrong side of it most of the time because I trade what we're in. So if I'm saying, okay, we're in this environment, I'm going to trade like this. When this happens, nobody knows for sure when that shift is going to happen. So usually this is where I take drawdowns, is when we see a shift back and forth between. So totally normal. And I think it also is good for the audience to hear when things are not going exactly as planned. And that's the reality of markets. You know, it's such the social media world is such a gaslit community because people are always only ever showing you the screenshots that they want to see and hiding the ones that they don't want you to see. So I think talking about periods where things are just not going as planned is very helpful to our audience. And I hope that you guys as an audience recognize, you know, how important that is in finding people like James, myself, or others that come on the show that openly discuss drawdowns and things that are not going exactly as planned. It's really important. So, yeah.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.